Hi there, a very warm welcome to you all. This is Simply Stocks, and today I bring to you a presentation on Welspun Corp. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Welspun Corp, his small request to kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts on short-term, long-term calls on markets, stocks, etc. Plus, if you can pay $100 upfront, then you get 1 year access by paying for 10 months, so that's a 16% discount. And also, if you cannot join Patreon, you can join me on YouTube with a monthly membership with Google Pay and other kind of, you can say, transactions. Also, you can directly email me if you have a number of stocks with you and you want a conversation with me. You can directly email me and we can work things out with a fee. Now about the company, Welspun Corp was established in 1985 and they manufacture tubes and pipes in stainless steel, exotic materials. And they have business all across the globe, not only in India, they export to Europe, US and especially in Asia. They also produce longitudinal LSAW pipes, spiral pipes and HFERW pipes which are used in different types of construction activities. So, a pure construction play, this is one of those. Leadership in hot rolled steel plates and coils, they have leadership in this space, and market cap of the company is around 4,000 crores. So, it is a small cap company that I'm talking about. If you look at the financials, then these are Q2 numbers versus last year. So, this is September quarter numbers. So, sales went up by around 12%, but profit dipped by around 15%. Owing to higher other you can say expenses and you can say material costs, so raw material cost has surged. Lower taxes helped the bottom line, so otherwise the numbers would have been even worse than what it shows on the profit front. They have reasonable debt and this is a cause of concern. Needs to reduce debt as well. ROE of around 12.4%, operating profit margin of 8% is not that great, but not bad either considering the industry that it works in, and there is a lot of competition in the pipe segment in here, and probably this is the reason why these are the kind of numbers that is the reason why the stock has not gone up appreciably compared to other peer companies in the construction ancillary segment. So basically, in the stock terms, stock is up around 3 times in the last 18 months. Most of the other stocks have gone up 7 8x. Was a drag before the pandemic. It was going down and went down around 40% before you can say 2020 during that period of shutdown. Numbers have improved, but bottom line is still struggling, and we are seeing that in the number that it's not growing in a streamlined manner as most of the other companies are doing. So performance has been subdued compared to industry, and we are seeing that on the numbers and on the ground. But there's decent promoter and institutional holding. Margins are decent, nothing great, but not bad either. And dividend payout is good by the company and the whole group itself. So Welspun India does well with dividends as well as Welspun Corp. If you look at the technicals, then there is strong support around the long-term support is around you can say 105, 110. But now with the kind of fall it has seen from 180 to 140, I feel even 125 to 130 will hold. So I think that is a reasonable support at the moment. Those who are holding can hold on to the stock. It is consolidating at the moment, and the larger up move is expected above 180. So before, unless it goes above 180, I don't see the stock surging a lot. It might be range bound between 140 on the downside and 170 on the upside. Although it looks fairly strong on charts, the way it is behaving, it has not collapsed under the pressure of the last 5 6 days of selling in the market. So stock has been doing well recently and has been consolidating well and showing a lot of support around that 130 140 regions. So if you have it, then hold on to it. Wait for major declines to buy. I believe from 120, 130 would be very good levels to buy. As I said, 105, 110 are good levels where the support lies. So this is purely a trading play in my opinion. I mean, even if you have a 5 year view, if you buy have a 5 year view, and if it doubles over the next 2 3 years, take an exit. But it is a very good, you can say, a trading play. By buying at around 120, 130 and selling around 170, you get a very good pop of 30 40%, or an upside of 30 40% in a year that you can take home. You can look at pure cash and consumption businesses rather than looking at pipes or construction ancillary. Even those are better companies. And it is basically economic revival and really construction activities. You have private sector and public sector, government pushing in with reforms, pushing in with a lot of expenditure that will take the stock higher. So you have to take that into consideration. So this was my video on Welspun Corp. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon or YouTube. Thanks a lot for watching.